Taxes. It's one of those things we all have to deal with, but what if I told you that there are legal ways to save money on your taxes and keep more of your hard-earned cash? No, I'm not talking about dodging taxes, because that's illegal, but rather using legitimate strategies that can help you minimize your tax burden. If you've ever wondered how the wealthy seem to pay less in taxes, or if you're simply looking to maximize your tax savings, you're in the right place. Today we're diving into practical legal methods that can help you save money on taxes. So grab a pen and paper, because these tips might just change the way you approach your tax filing. Taxes are one of those inevitable aspects of life, and while we all need to pay them, it's important to be aware that there are ways to legally minimize how much we owe. Saving money on taxes isn't about cutting corners, it's about being strategic with your financial decisions. Let's break down some of the most effective strategies to help you save money on taxes legally. 1. Maximize your tax deductions. One of the most straightforward ways to reduce your taxable income is by taking full advantage of tax deductions. Tax deductions lower your taxable income, which in turn reduces the amount of taxes you owe. There are a number of common deductions you should be aware of. Standard versus itemized deductions. The IRS allows you to choose between taking the standard deduction or itemizing your deductions. The standard deduction is a fixed amount, but if you have substantial expenses like mortgage interest, medical expenses, or charitable donations, you might be able to save more by itemizing. For example, if you donate to charity, those donations could potentially be deducted from your taxable income. Business expenses for entrepreneurs. If you're a freelancer or small business owner, you can deduct a variety of business-related expenses. These include home office deductions, business travel expenses, office supplies, and even some meals and entertainment related to business activities. Keeping track of these can add up to significant savings. Education and medical deductions. Did you know you can deduct certain educational expenses or medical costs if you've spent money on student loan interest, continuing education, or unreimbursed medical expenses? You may be eligible for tax deductions in those areas as well. 2. Take advantage of tax-advantaged accounts. Tax-advantaged accounts are a fantastic way to reduce your taxable income while building wealth for the future. These accounts offer specific tax benefits, such as deferred tax payments or tax-free growth. Here are a few popular ones. Retirement accounts, 401k, IRA, Roth IRA. Contributing to a 401k or IRA allows you to lower your taxable income for the year, since contributions are often tax-deductible. A Roth IRA is a little different in that you contribute post-tax money, but your earnings grow tax-free. By maxing out contributions to these accounts, you not only save for retirement, but also reduce your taxable income in the process. Health savings accounts, HSA. If you have a high-deductible health plan, an HSA allows you to set aside pre-tax money for medical expenses. The best part: contributions are tax-deductible, the money grows tax-free, and withdrawals for qualified medical expenses are tax-free as well. It's like a triple tax benefit. Flexible spending accounts, FSA. These accounts are offered through your employer and allow you to set aside pre-tax money for medical expenses, dependent care, or other qualifying needs. FSAs reduce your taxable income, so be sure to use this account for eligible expenses. 3. Invest in tax-efficient investments. The way you invest can also have an impact on how much you owe in taxes. Some investment strategies allow your money to grow while minimizing tax liabilities. Here's how: long-term capital gains. When you sell an asset, such as stocks, bonds, or real estate, you're subject to either short-term or long-term capital gains tax. If you hold an asset for more than a year before selling it, you qualify for long-term capital gains tax rates, which are typically lower than short-term rates. So if you're planning to invest, think about holding those assets for the long haul to reduce taxes. Tax-deferred accounts. As mentioned earlier, contributing to accounts like a 401k or IRA helps to defer taxes on the money you earn until retirement. This means your investments can grow without being taxed each year. Additionally, if you're investing in an HSA or Roth IRA, you can enjoy tax-free growth. Tax-efficient funds. Some mutual funds and exchange-traded funds, ETFs, are designed to minimize tax liabilities. These funds are structured in a way that generates fewer taxable events, which could be a great option if you want to reduce the tax burden on your investments. 4. Utilize tax credits. Tax credits are even more powerful than deductions because they directly reduce the amount of taxes you owe. Some popular tax credits include Earned Income Tax Credit, EITC. This is a credit aimed at helping low to moderate income workers. The amount of the credit depends on your income and family size, but it can result in a significant reduction in the taxes you owe. Child Tax Credit. If you have children, you might be eligible for a child tax credit. This credit can reduce your taxes by up to $2,000 per qualifying child, with up to $1,400 being refundable. Education credits, American Opportunity and Lifetime Learning. There are two main education credits available to help offset the costs of higher education. The American Opportunity Tax Credit can give you up to $2,500 per year for the first 4 years of higher education, while the Lifetime Learning Credit offers up to $2,000 for eligible education expenses. Energy Efficiency Tax Credits. If you make energy-efficient improvements to your home, you could qualify for tax credits. These could include credits for installing solar panels, energy-efficient windows, or other green home improvements. 5. Consider tax loss harvesting. Tax loss harvesting is a strategy where you sell investments that have lost value in order to offset gains from other investments. For example, if you made money on the sale of stocks but lost money on others, you can sell the underperforming investments to offset the gains, thus reducing your taxable income. This strategy can help you keep your tax bill lower, especially in volatile markets. 6. Keep records and stay organized. Lastly, one of the most important things you can do to save money on taxes is to stay organized. Keep meticulous records of your income, expenses, receipts, and anything else that could impact your taxes. When tax season rolls around, having all the necessary documents and information in place can help ensure that you don't miss out on deductions or credits that could save you money. So there you have it, 6 powerful legal ways to save money on taxes. By taking full advantage of deductions, tax-advantaged accounts, tax-efficient investments and credits, you can ensure that you're not paying a penny more than necessary. Remember, taxes don't have to be intimidating. With the right strategies, you can keep more of your hard-earned money in your pocket. If you found these tips helpful, be sure to give this video a thumbs up and subscribe for more financial tips and strategies. And as always, consult a tax professional to ensure you're making the best choices for your unique financial situation. Thanks for watching, and I'll see you in the next video.